Morning, everybody. Welcome to the second instalment of our At Leisure series, which this month focuses on the hotel and hospitality sector and is very cleverly entitled Accommodating the Unknown. It's good to see some returnees from our first webinar, which we did in November, which focused on the challenges and opportunities within the holiday park, the Southwest Holiday Park sector, and the much publicised staycation market, which is all over the news at the moment. We had some good feedback, seemed to be well received. If that's a topic that does interest you and you haven't already seen it, I'd like to point you in the direction of the recording which we have on our YouTube channel for those of you from the professional backgrounds who might have clients or colleagues who are interested in that sector. It might be a good watch for you. So please do head over after this and watch that in conjunction with this if you've got colleagues who have missed it. Feel free to share that with clients, colleagues as you see fit. I'd like to kick this month's session off with introducing our contributors to you all today. So each month we let's bring in a leisure industry professional from outside of Vickery Holman along with us, as well as a well-known operator with feet on the ground in the sector to provide on-the-ground experience. Firstly, my name is Ollie Steer-Fowler. I'm the head of leisure at Vickery Holman and have been with the firm for just over 2 years now, working out of our Exeter office. In the general practice and agency teams. So we cover from Land's End all the way up to Bristol from our 4 offices. So we've got quite a big patch. I'm joined by Mike Easton today, who's our head of hotels and hospitality and has had extensive experience as an agent in the sector for over 15 years with 2 of the national consultancies. In addition to me and Mike, we're delighted to be joined by Tom Roach this morning, who's a partner and head of leisure and tourism at Francis Clark Accountants. Tom has a wide-ranging portfolio of clients in the hotel and hospitality sector and is well placed this morning to provide us with a keen insight into the last 12 months happenings in the sector, as well as his thoughts on the next 12 months and what that might bring. So it should be an interesting listen this morning. And last but by no means least, we're also joined by Mark Godfrey, who's the owner and operator of the multi-award winning wedding and events venue at Deer Park Country House, which I'm sure many of you will have heard of or been aware of. Mark's going to be sharing his thoughts this morning on adapting his business to change over the last 2 years or so, as well as his experiences of the challenges that have been brought about by 2020 and the pandemic. So welcome to you, Mark, Tom and Mike, and to all of you here who've joined us this morning live. Thanks for coming along. Obviously, it will be up for recording afterwards, so it'll be widely shared, I'm hoping, as we always say, but it's good to see some familiar faces here in the attendees this morning. So just to quickly go over our format, we're hoping, as we did last time, to keep it fairly conversational after the more formal elements at the start of the webinar. So please feel free to ask questions in the chat panel to the right of your screen at any time, and I'll hopefully get around to asking them to the relevant panel member further into the session. In these first 20 or 25 minutes or so, though, we'll be hearing a market update from Mike, who's just joined me on screen, our head of hotels and hospitality, followed by a slightly more in-depth review from Tom Roach, looking at key performance indicators, the impact of the pandemic on the sector in particular, and interestingly, his thoughts moving on into the new year and what that might look like. And then we'll be going into a open Q&A with Mark on his business at Deer Park. They've joined us on screen now, and how he has adapted with the times and his first-hand experiences of what has been a pretty interesting year. Mark, I think you'll agree, as well as getting input from the other 2 panelists along the way, of course. So as I said, any questions that you've got along the way, pop them in the chat panel on the right-hand side, and about halfway through, 3/4 of the way through, we will hopefully get around to asking those to our panel members this morning. I'll now stop waffling on and let Mike Easton kick us off this morning with his agency market update for the hotels and hospitality sector. Over to you, Mike.
Thank you, Ollie. So I'll follow on the waffle, probably in good agency format. I joined Ollie and the team last month at Vickery Holman to extend their hospitality and hotel offer in the Southwest. Very strong team. I was surprised by the amount of work that they already did in the sector particularly for ratings and for valuations. So the drive is to grow the agency business, of which there's already quite a lot of knowledge within the 4 offices that Ollie's mentioned, and certainly his input is superb for what we're looking to do in the future. I'm going to do a very brief overview just on the operating side, because I know that Tom will be much more technical and probably more interesting. So from that score, if I look back at 2019, I think it was a very steady year. Actually, most of the hotel sector in the Southwest was in good growth, and that looks set to continue into 2020, when obviously, in effect, the lights were turned off back in March. What was quite telling, I think, that from speaking with operators during that period and certainly after, is the difference in how some of them approached the issues that were put in front of them. The better operators, as you can imagine, took it as an opportunity to take a deep breath, have a look at their existing businesses, look to make some improvements, look to make some changes that they more likely wouldn't have made had they been day-to-day operating, and start to make plans for the future. The sector as a whole is, I would say, quietly positive about the future. The hotel actual occupancy and rate was very good when lockdown 1 came to an end, and it was a very, very strong summer. So much so that for a couple that I've spoken to, whilst revenue was down, profit was up. And certainly the medium-term view is that 2021, 22 are going to be very strong. More immediately, with lockdown 2 and the extension of the furlough scheme, there are a number of them, particularly the larger sites, that have taken the opportunity to close their businesses through the traditionally quieter months, no Christmas parties, no holiday bookings, and make some investment into their estates and look to reopening in March next year. The Southwest should be taken pretty much in isolation to the national picture, because the hotel national picture is sort of taken up, I suppose, by London and the larger cities, where the corporate occupier market has been quite heavily affected, really, by what's gone on this year, whereas the Southwest, I think, has pretty much striven to get the benefit from people who actually want to get out, enjoy themselves, and do it more locally. So I think what's important when we look ahead is actually how the Southwest operates, as opposed to the rest of the UK. So that's sort of it on an operational front. It was quite interesting. We did have some hotel openings this year. We had a couple of delays, but I suppose as with the hotel market generally, there is no middle ground anymore. I think you either have to be very good at what you do because your customer is much more informed, the market is much broader. We've obviously got the new guys in the digital age with Airbnb, guest houses, sort of some of them moving over to that format, and then a lot more accommodation generally across the holiday park market and so on. So we did see some openings. We saw them in the budget end, where we finally saw the Holiday Inn Express open up down at Cornwall Services, and also because Cornwall was pretty much the only county that had new openings in the Southwest. We saw the Premier Inn opening in both Newquay and in Penzance. That's on the budget side. And then the other end of the market, the Pig at Harlem Bay opened after a slight delay, as did the King's Arms in Dorchester by the guys at Stay Original. That's quite a good product if people want to check that out. Some of the delays, but still planned for next year. We've got Bodmin Jail coming on stream in February, and then we've got down in Torbay, we've got the Fragrance Group, who have picked up a number of sites over the last couple of years and are under construction in Paignton for a Mercure and an Ibis Styles, and further on to that, they've got 2 more sites where that'll be an additional, I think it's about 340 rooms for the other 2 sites. We've also got Tony Rose project by Exeter Chiefs, which will be purported to be the Marriott at Sandy Park, 250 rooms, and Premier Inn again, openings in Torquay, Plymouth, and we've got a Hampton by Hilton coming in Torquay as well. So it's good to see actually there's still quite a strong demand, and from a development front, there's quite a lot going on. I think in the market generally, the guys at the budget end and at the 4-star end have actually done very well. And as I say, it's the middle ground which is still struggling a little bit. Coaching market, that's been very difficult this year. Customer base, obviously, intrinsically it's slightly older, although there's a lot more self-drive holidays these days. But that's a market that's quite tough, and I think will continue to be so. So that's how I see it from the operational side. From an agency side, 2019, going back to that, deals were actually quite thin on the ground. I think it has been quite tough. There hasn't been a lot of stock for quite some time. We've got, I suppose, we've moaned for probably the last 10 years about bank support to the sector, and I think there's a lot of support for existing operators, but quite difficult for new starters into the industry to come in unless they come in with a significant slew of capital, and so that looks set to continue. 2020, as it happened, started off quite brightly because we'd gone through the last quarter of 2019 with a general election. We had Brexit, which is obviously coming back more into the news this last couple of weeks. But 2020, the start of that actually was quite bright, and then really it was a case of the tap was turned off in March, as it was for everybody. But when it came back, it actually came back quite strongly. We did see quite a bit of pent-up demand. Most of the deals that were sort of put on hold at the start of COVID-19 were taken back up. There was very little fall-through rate, and that was quite encouraging. I think the second lockdown has probably been a bit more difficult from from an agency point of view, and what we're tending to see is in the hotel sector, and I cover hotels and hospitality. In the hotel sector, I think most people are just holding on. Most people have made quite good plans and are looking for investment, and there still won't be that much stock. I think across hospitality in the food and beverage sector, that's a slightly different picture. And I think from an agency point of view, there's probably more opportunities in that market and less in hotels, which I think are probably going to ride out the next 18, 24 months quite successfully. So that's pretty much a brief overview from an agency perspective, and I'll hand over to Tom, who'll give you the more technical insight into that.
Oh, I've myself on the screen. Thanks, Mike. I'll just introduce Tom now. Mike, just to pick up, I'm quite interested to see the impact that the fragrance group's purchases will make on Torbay. I think that's going to be pretty interesting to see actually how that pans out, because they were some quite big and bold steps into what was quite an aging market. So that will be particularly interesting. Just pick up on that.
It's an absolute game changer and almost justifies the South Devon Link Road completely. To put brands into Torbay, which is the classic Victorian holiday destination, fallen on harder times for the last two generations, really. Putting that stock in, the Premier Inn, the Hampton by Hilton, that's a big thing. It seems to be at the moment all of the progress, or significant progress, is Torbay and Plymouth. They seem to be the two centres where much of the activity is going to be sort of going on in a development.
Yeah, I think that there'll be a lot of other firms who have probably got quite a keen eye on that as well, just to see how that goes and how that pans out for the first year or so. They're going to be hoping that there's a pretty buoyant market, I'm sure, when they actually launch those. Okay.
In both markets, it'll be about bringing the room rate up. I think they're both markets where actually the room rate has been very, very low, and invariably that brings about development. It gets to its lowest point, and you sort of get the opportunity to start again.
Yeah. Great. Thanks, Mike. Tom, over to you for your thoughts on the market, and as Mike coined it there, a more in-depth look, and over to you.
Okay, well, we'll see about that. But I'm Tom Roach, partner at Francis Clark in Truro. Look after the tourism and leisure sector for the firm. We've got a predominance of hotel clients, or mine is predominantly in Cornwall, but the firm overall probably covers about 70 hotels of various guises across the region, and we try and keep database of the information that we have on those, which is largely profit and loss information and occupancy. We do an occupancy survey monthly, and they've obviously had some interesting figures recently. So moving on to that and starting with that, because that probably gives it tells the story reasonably well, and I don't want to just make this death by PowerPoint, but we'll start with this one, which is really just the occupancies over the last 10 years or so. And not wanting to give too much of a history lesson, but the off-peak periods were coming up strongly. A lot of good work by Visit Cornwall and Visit Devon in getting some of those things up. And then really not wanting to dwell too much on that, but this year I think it's important to remember that the early part of the year was actually looking a little bit sketchy as people were starting to worry about COVID before it actually came in, and that certainly had more of a bearing on February trade than perhaps was originally or has been since considered. So everyone was talking about the lockdown mid late March, and then really the massive upheaval that the businesses have had in trying to get the show back on the road. The numbers that came back in August, September, October were very impressive indeed. We had a lot of staycations, and everyone saw that market coming through. I had hoteliers saying, look, they fall into two guises. You've got those, and I've done this presentation before on this particular matter, but you've had those awful people that normally go to Iron Apple, and we don't really want them back, but we've got intergenerational families that have been coming down. They maybe haven't come down for maybe 10, 15, 20 years even, or they're bringing their grandchildren down for the first time, and they've fallen back in love with the West Country, which is great to hear, great to see. And I think it's reasonable to assume that a decent proportion of those will come back. We didn't see the COVID spike in the West Country, particularly, certainly not in Cornwall anyway, from visitors coming in. A lot of people keeping people very safe, and people reassured by that. So then, of course, the lockdown happened again. I have to say that my inbox and my phone particularly was a lot busier on the first one than the second. I think the second one, in some ways, and we'll come on to this in a minute, has been protected. Mike mentioned earlier about hotels deciding whether or not they're going to reopen at all this year, and I think they fall into two camps. We've seen on a lot in the press about some that is going to stay closed, and then it becomes a debate as to when to open, whether it's Valentine's or whether it's Easter. But there are undoubtedly going to be some that don't open for the best part of 4 months or so, having shut. But just the general upheaval that hoteliers have had to deal with has been quite immense. The summer trade, not only was that occupancy increases, but latterly, at least, the increase or the decrease in the VAT rate was incredibly helpful there, and we'll talk a bit more about that in a minute. But that's really the story on the occupancy side, and that's coupled with some good spend as well. So moving on then, the government's initiatives, they've been they've been coming in incredibly quickly. The business interruption loan scheme came in, and I think banks were told at 4 o'clock on the Monday morning that the rules on them, and they're expecting to administer them at 9 o'clock. Banks have done a good job with those. There was a lot of negativity around that initially, when people saying, well, the banks aren't going to lend, are they? It's going to be a disaster. And the government had to do a few things to try and stimulate some of that in terms of B bills certainly came in, and maybe some people taking B bills that shouldn't have done, but in the main, that's money that's got out into the market. People have got plenty of the cash that they've needed, and most, because hotels are generally asset backed, have certainly in the privately owned ones, have been able to get what they needed largely to get through, and that is actually demonstrated by perhaps the lack of supply that Mike's already mentioned. Furlough, again, a massive administrative nightmare for HMRC, and you know, I don't like saying this, but I think they're probably to be commended for that. The wage costs for a typical hotel, everyone knows, 30 to 40%, probably more towards 40. The government's taken about £1 billion a day hit on that, and it's a massive cost. It's helpful for hotels, and talked earlier about the shutdown point and when to reopen. I think some of the decisions around reopening are being driven by the furlough scheme that's there in place now. If that hadn't been there, clearly people would have had to been opening more for this current period up to Easter. But I think with that being in place until the 31st of March, it is the 31st of March that's the problem date now, not now so much. The VAT reduction as well, that has enabled businesses to get an awful lot of extra cash in. You saw the improved figures for the summer. That's really driven cash. That was installed in the same document as Eat Out to Help Out. Both of those schemes were in a document produced by the government entitled something along the lines of support for jobs. So it was clear that the VAT reduction wasn't to pass on to people staying, it was to help the hotelier. And virtually all of the ones that I've certainly been talking to have been able to benefit from that. Actually, the stats within that document were quite startling. The amount of money that people have in their bank account at the start of July compared with the end of March had gone up considerably, and the government knew that, and they wanted to take some of that out, which was the Eat Out to Help Out scheme, get people to spend money in the economy rather than leave it in their own bank accounts. And personal debt levels had gone down as well. People were paying off quite a lot of personal debt, so the government could see that there was capability there. It was just a question of mobilizing it. The Chancellor might live to regret Eat Out to Help Out. I think certainly some negative publicity from that to do with infection rates and all the rest of it. But generally, they did achieve what they were trying to in terms of getting money out into the general economy. The rates support was clearly helpful, and that continues to be the case. So just moving on then, just quickly, and really this isn't so relevant on this presentation, but I will just cover it off. We've seen from the economic outlook that the UK always seems to be just nudging a bit ahead of Spain in terms of how bad it is, but also slightly less bad than Spain, but everywhere else seems to be doing better in terms of how bad COVID has hit the economy. A lot in the press as to the reasons for that, and it is because we are a largely service-driven economy, and tourism plays a big part in that. If ever we wanted to prove that, this year has certainly done that. But it's also important to realise that, or remember that, a lot of the money that's spent in tourism stays in the local economy, certainly for more, at least one cycle more than would be in many other businesses. And what I mean by that is maybe say it's 40% of spend in hotels goes on wages. That may go through to paying mortgages and utilities and all the rest of it, so that goes out of the economy immediately, or at least to bigger corporates. But the food and drink spend, the repairs and renewals, the spend on advertising, PR, dare I say it, surveyors and accountants and solicitors, that is staying in the local economy certainly for one cycle more than it would otherwise be. So that's a stimulus for the for the support to continue, really. And my sense is that the government has done enough. Businesses, in the main, are certainly sitting on as much cash as they did have. Obviously, a lot of that is because they've taken a lot more debt than they did have, but the liquidity that the businesses require to continue is generally there. And in fact, several of my clients are looking at projects to develop and also look beyond COVID to, or maybe more secured COVID trading facilities. So looking at more self-catering opportunities within the hotels themselves, and kitchenette type areas, all of those sorts of things, which again is going to keep economic activity within the local building trade over the next 6 months or so. So really that brings me on to my sort of next slide. I think that, we touched on open or closed already. I think people have obviously made those decisions now, and a lot of this is about things just happen so quickly. So I think most hotels have either decided to stay open or closed, but there is a mix. There's undoubtedly a mix, and we've seen that in the press. March 21, I mentioned earlier about C bills and B bills and all of the other debt options. We were very heavily involved in that in March and April in terms of getting business plans to banks and making sure that they had the information they required. And bar none, the crunch point was March 21. Fingers crossed for a vaccine, really, I think, is where we're at there. But again, as I mentioned earlier, there are going to be a lot of people that will continue to come to Devon and Cornwall that hadn't been for a while. So we've had probably a better marketing opportunity over the last 12 months than we've ever had as an industry, and that's important to continue. And it would be nice to see some government support from that in terms of advertising opportunities, which we've had very little of over the last forever, really. So that would be good. I'd personally like to see the VAT reduction continue. I never thought I'd say that. I thought that it's far better to stimulate things through incentives to do developments of properties and the like. But the VAT reduction, I think if that could be somehow coupled with a look at the requirements for debt coverage, I think that would be quite useful. What I mean by that is, I think banks, whilst they have been pretty good at providing the finance and they've open for business, all of those things you hear from the banks, they've been broadly forced to lend. And a lot of people will recall the business sector is standing up and pretty much saying, we help the banks, now they've got to help us. And I'm not sure I necessarily agreed with that sentiment, but nevertheless they have. I can see coming around the corner some issues with cyclical valuations for hotels, particularly. And I think, and there's a bit of a plug for Vickery and maybe other local surveyors, but I think local knowledge is going to be key to that. You've got to remember that nationally, the hotel picture is probably a lot more tainted by COVID than it is perhaps down here. A lot of people will have seen the stats coming out of London, some pretty miserable statistics, and we're actually far better off down here in terms of occupancy for the first time ever. And so it will be important that we keep that local knowledge and we keep that at the forefront of valuers' minds as those valuations come through. And some support from your accountant as well probably won't go amiss there either. So a bit of a plug for me, I suppose, there. But we can certainly help with that and make sure the information gets to the valuer, and make sure that they take it on board or at least have it there available. So generally, to conclude, I think we've got through this as well as we could have done, and it's time to plan for next year, which hopefully will be fairly buoyant as well. But not to be too trite about it, I will now pass on to the next contributor with the question and answers, I think, Ollie.
Just very quickly, while I've got you on, it's and very interesting. I think it will be interesting to see, as you say, whether the VAT reduction does and some of the other schemes that are in place at the moment actually are extended. And I know really only time will tell. I don't know whether you've got any further insight, or whether you've heard any murmurings in your channels as an accountancy practice as to whether that is indeed going to happen or not.
I haven't. All I would say is when they've already extended the VAT reduction once. They haven't got anti-forestalling measures in, and a useful tip for any hoteliers on the line who haven't already heard this, don't forget to invoice early, change your terms and conditions. If you invoice pre 31st of March now, you will be able to invoice at 5%. Your VAT point is the earlier of the invoice date and the cash received, so that or the stay. So that's important. So I think the fact that they're not including that, there's some hope there. Clearly Brexit's going to have a bit of a bearing on that, and they can make their own decisions on it. And everyone knows in the world trotted out phrases that that Europe has a lower VAT threshold in hospitality. Is clearly something that the government aren't going to like to have brought up too much. So you could see, if I had to bet on it, which it would be, I would think they will raise it, but probably not back to the 20%, and we're likely to see more variable rates coming in on other things as well.
Sure. Yeah, no, thanks for that. Very quickly again, well, I've just got you on here before we move on to our Q&A session with Mark. Robin from Services Tourism has asked, question for Tom, the industry has a history of using early deposits for winter investments. With COVID impacts and difficulties in assessing insurance payouts, do you anticipate that the businesses will be more wary of borrowing in this way?
No, I don't really, and that the reason for that is for the reason I've just given, actually, that I think we'll be able to get more money in through looking at advancing sales for next year. I think businesses have to be a bit careful with doing that and make sure that they keep that under control. But undoubtedly, deposit levels that businesses have historically sat on are something that banks generally don't understand, I would say, and it hasn't been until COVID and some of the projections that we were doing earlier in the year that they actually sat up and thought, hang on a minute, that £500,000 that this hotel's sitting on in deposits it isn't going to be there come July because people aren't booking for the rest of the year. So I think it's been a bit of a lesson for banks, but and they're likely to be looking at that more closely.
Yeah.
But yeah.
Thanks, Tom. I hope that was interesting. Both Mike's and Tom's inputs there were interesting for everybody who's with us. I'd like to now bring Mark Godfrey onto the screen. If you can come on, Mark. Well, I think the microphone might be on mute there, Mark.
I think live.
There we go. You're live. Please do. You're live on Channel 4. Please do not swear. Mark, yeah, just for those of you, for the loads in the audience who don't know about Deer Park, if you could just give us an overview of what you do at Deer Park, the nature of the business, and yeah, just a brief overview for us, that'd be great.
Yeah, sure. Thanks very much for inviting me today. It's great to be here and see so many friends on the call. So yes, Deer Park Country House, exclusive use venue now. Our 300th birthday next year, actually, as a Georgian manor house set in 80 acres in East Devon. So it was a hotel for about 56 years until October 2018, when we took the decision to change our future and our strategy. Essentially, we saw the landscape changing in country house hotels around us with the arrival of Lympstone Manor, the Pig at Combe, and Pashco House, and at the lower end, the Premier Inn in Honiton. So we were being challenged quite heavily from a hotel perspective. So we did a strategy review. We reviewed our market segments in terms of revenue and profit, and quickly realized that the leisure market was eroding our profit. it wasn't profitable, and in fact, it was eroding the profit from weddings and events. So, you know, we took a big decision, agreed by the board, to move into an exclusive use wedding and events arena. So I'm a hotelier by trade, but I don't have sleepless nights about occupancy and ADR. Our key performance indicators are number of weddings, number of guests at weddings, and the average spend at weddings. So this year was set to be our best year ever, with 122 weddings booked. 2020 was our year. It was a great year to get married, and then COVID hit us. So yeah, we've had a really tough year.
Yeah, I think those sentiments are probably shed. You know, what is really interesting, Mark, actually, is that you've actually made that jump towards the other way from a lot of people, which are looking at this sector and going, actually, do you know what? We will go back to taking advantage of the staycation trend and actually, move back towards a hotel, away from wedding venues and exclusive use venues, which are actually, a lot of which we're seeing in the marketplace at the moment, are failing. What do you think has been the secret for you in terms of your success? Because you've done very, very well out of that move, which is actually, as you say, pre-COVID. What do you think have been the sort of your secret to success there?
Well, we obviously talked about returning to a hotel model, seeing all of our great hotels in the Southwest benefit from the staycation through the summer, and also benefiting from the VAT reduction, obviously furlough, and also business rates. So it was a very tempting to go back, but we'd spent so much time, energy, and money on our brand and getting to where we are. It would have been really confusing for our customers and others to revert back to a hotel in the short term. It would have been a knee-jerk reaction, really. So what we did, the strategy we applied, was continue to market hard. We opened for show rounds on the 14th of July, and the place looked absolutely stunning through the summer. We didn't furlough the wedding team. We didn't furlough a couple of the gardeners, and myself, just got stuck into making sure the place looked amazing. So the way we survived was turning from a P&L business to a cash business, essentially. And all those new bookings we took, the deposits kept us going. And actually, we've had the best 8 months of new bookings ever. Because the place looked amazing. Every couple got a gift after the show round, and we were all over it. And we took an additional 80 new couples for 2022. Most of our business has transferred to 2021. 2022 is now looking good, and 2023 is coming on now. So for us, it was all about being cash neutral, taking new business, because one deposit of £1,500 in the future will be a wedding of £20,000. So
So have you over the course of this year, in the months where you have been able to operate, you've still been able to operate profitably, even with reduced numbers? Because I know that's been a big issue for you?
Yeah, it's been an absolute nightmare. So the issue we have with those couples that are determined to get married, and we started off in the summer with 30 guests allowed, and then down to 15 guests. It's absolutely not profitable at all. And in fact, it's really painful on our cash flow, because those individuals have not only prepaid for a wedding way above those numbers, so they in effect get a refund for every wedding we do. We deliver it brilliantly, of course, but we also are giving refunds, which is hurting cash flow massively. So, we want people to maybe have the ceremony, get married, and have the party next year.
Yeah, no, that's interesting. Because Tom, what's your thoughts on the wedding and venue sector for next year? Have you seen? You've obviously got a few clients in this sector. What are your thoughts on the wedding and venues sort of exclusive use venue sector for moving into next year?
I think some people have moved away a little bit from it, unlike Deer Park. I think you've seen what happened over the summer for your general staycation market and the pent-up demand. So the theory would be the same, wouldn't it? And Mark's already said, I think the pent-up demand for 2021 for his venue and others like it is going to be quite extraordinary.
Please do keep your questions coming in, because obviously we've had another one from Robin that's come in here. I'm interested in people's thoughts on, I'm not actually 100% sure how we pronounce, is it Oyo or Oyo? They arrived at a huge a year ago, but have since gone rather slowly with a mix of positive and negative feedback. I know that they've got an influence in the Southwest now. It might be a good one for Mike to come in on this.
Yeah, absolutely. I dealt with them last year. As you say, Robin, they sort of came out. I mean, fundamentally, they're I suppose they're of an age branding like Best Western. Ultimately, that their approaches were to private operators to sort of say, well, what we need to do, guys, is we need to club together to create a brand. They'd already established the brand, if I remember rightly, it was in India, and that way we can obviously sort of stand side by side with the bigger brands, because ultimately we are in a market where brand has become very important. People are a bit careful with their money. They want to trust what they're spending it on, and that's probably why we've seen the rise of people like Premier Inn, where people just say it's fine. We know what it is, we believe in what it is, we're happy with the value, and take it from there. And in fact, that sort of comes back to Mark's business. That business is now so well established that people trust it. And as some of these hotel groups are starting to go backwards in the wedding market, I think that's more power to your elbow, actually, Mark, because I think you'll stand out from the crowd. Some people have had a bad experience with how other venues have dealt with wedding bookings. I think we touched on yesterday that some people decided not to get married because being together in lockdown wasn't something that they enjoyed, where they've been replaced by people actually that do want to get married. But sorry, coming off topic there, I think with Oyo, they probably have just struggled in the Southwest because I don't think that they fully appreciate it. I mean, we've got a very strong privately operated market down here that doesn't necessarily need that type of branding. And in fact, a lot of them would rather not have it. I think it's been more successful in the provinces elsewhere, where they're fighting against city centre hotels, but we just don't really see that down here. And I don't think they got any big wins very early. My involvement with them, they were looking to buy, but that never actually led to anything. So I think they've only got half a dozen sites in the Southwest at the moment, and that doesn't make for a brand. Simply,
they probably have come up against a lot of competition down here from things like Airbnb as well. Obviously, they've not had a good year with this year in particular with COVID, as everybody has struggled. So there's a mixture of things going on there. But like you say, they haven't been able to establish that brand down here quite as they would have liked, I don't think. Have we got any further questions for our panelists from anybody? I know, Tom, you had a couple of points that you wanted to raise in the Q&A. Tom, sorry, I know you had a couple of points in the Q&A if we're not having any questions come through from our chat panel.
Yeah, I think I've probably raised the main one already, actually, which was the VAT and the follow through for 2021. It's looking really positive. That I mean, there's no guarantees they won't bring in anti-forestalling measures. What I mean by that is, so this thing about being able to invoice. So as it stands at the moment, a hotelier would pay VAT on the money they receive upfront on the deposit. If you converted that and say, well, when you send them the booking confirmation, you send them a VAT invoice with that crystallizes the VAT point, which would be at 5%, and So yeah, saving your VAT over the longer term, obviously bringing it up front, but 5%, and you know, against the fact that VAT rates might go up, that should be a good thing for people.
Yeah,
so that's the main thing.
Leslie's come forward and said, are hoteliers expecting overseas visitors in 2021, or is it mostly local booking? I don't suppose, Mark, do you get a lot of overseas weddings that you do? I suppose it's not really the sector that you're in, is it?
Not really. We have about 5% of overseas, but generally they are expats returning for their wedding here. But I think the wider question is we've all seen the massive staycation impact in the Southwest, which has been booming. Are we going to see that next year, or are people going to take once they've had the jab? Are they going to take the opportunity to return to Greece instead of to Salcombe? I think hoteliers have got a huge opportunity here, and they need to really step up their marketing, really step up their customer engagement, take the opportunity to improve the product, and as soon as they can, is continue to get bookings in for next year.
Yeah, I think a lot of people, we actually had our market review on Thursday last week, and I asked that exact question as to where people were looking to plan their holidays for next year. Were they looking to go abroad? And usually I think you would see sort of 70 or 80% respondents obviously say that they were looking to go abroad. That figure was actually now more like 40 to 45% from our poll that we had. So there is definitely a pent up, whether it's anxiety or whatever you want to call it, there will certainly be a period next year where people are understandably, whether they've had the jab or not, as you put it, Mark, whether they have had that or not, there will be a period of time where people are anxious to go abroad. So yeah, people have really got to up their game with their marketing. A lot of people have used the period at the moment to take stock, certainly the second lockdown, to take stock of their offering, streamline their business. And it will be really, really important to sort of come out all guns blazing from February next year when the market does emerge again, to take advantage of that pent up demand, as you say.
Yeah.
But in terms of overseas visitors, Leslie, I think it will just be mirrored across, certainly from European visitors, it will be mirrored. Our situation will be mirrored in other countries. So I wouldn't be surprised if certainly the first half of 2021, we see reduced visitor numbers from overseas, until that confidence in overseas travel comes back. So there will be, the staycation market within the UK and internal travel will really dominate the agenda, certainly up until the middle part of next year, maybe even further, depending on how, if we see another further lockdown, for example. We've got a further couple of questions from our audience.
The stuff coming through on the feed that there's probably going to be as many wanted to come that don't want to come, and vice versa from other countries. But I don't think we should underestimate the marketing that this whole debacles had for the area, and I think really shown us in a very good light indeed. And we've had massive exposure on that over the last 6 months or so.
Yeah, no, I think the Southwest has been, I agree with you, Tom, there. I agree. The Southwest in particular has been shown in a very good light. Sue says, I live in Lou, and at least 30% of bookings here in private holiday lettings are normally overseas visitors. So I think these businesses will be hoping so. Deborah says, BVA are still predicting a high level of risk aversion from overseas trips, about 60% from their insights research. Thank you for that, Deborah. Agree with Ollie, our customers are already, Heidi says, agree with Ollie, our customers are already saying that they are 80% full, but not sitting back and really pushing for the low season. The low season, I did pick up from Tom's occupancy table earlier on. The low season, obviously, in October, occupancy levels were much, much higher than they were in the preceding 9 years. So the shoulder weeks of, well, not so much February from a self-catering and hotelier's perspective, because of the half-term season there, but March in particular, will be really, really key for people to pad their figures for next year. Sammy says our overseas guests are still planning to come next year. They shifted their bookings from this year, but are keen as mustard to come back. I think many 2020 staycationers will go overseas again. Some may stay as staycationers for another 12 months. Thank you for input there, Sammy. John asks, Mark, are you up for hosting a lavish Samphire party next year when restrictions are eased?
Well, interestingly, I had an inquiry yesterday from the Exeter Chamber of Commerce for a big party next summer as well. So, I think there's going to be a tsunami of celebrations once this thing is over. People have missed out on celebrating milestone birthdays, milestone anniversaries. Even the wakes haven't had the opportunity to celebrate loved ones' lives. So I think there is going to be a huge amount of celebration next year, and filling all of those empty dates for us would be great.
Yeah. So that's loosely a yes then, Mark.
Well, it's a definite. We are almost the second home of John Harvey.
Yeah, no, that's understandable. I know that Robin's just put on there actually. Robin said that we're planning some huge tourism awards parties as soon as safe. There is going to be a floodgate scenario next year at some point. Obviously, pinpointing that time and date is going to be impossible because we don't know certainly what the next 2 or 3 months will bring, and it will all be reliant on how the jab comes in and is sort of dispersed throughout the country. Yeah, Sarah, yes, we can. So can we get Tom's slides on occupancy figures, please? Couldn't get it big enough. Yeah, we will be circulating the slides afterwards. And obviously there will be a YouTube recording of this webinar afterwards. Any further questions in the chat before we bring the session to a close? I'm conscious we've got about 7-8 minutes left, just to see if anybody has got anything else to ask our panelists. But if not, we will. Any thoughts on how to know if people have had the jab? Do you let people party? Do you let people party provided everyone provides evidence that they've had the jab? It's probably a question for you, Mark. Is COVID safe procedures at the moment is obviously a huge factor throughout the industry. What are your procedures that you've got in place at the moment?
We've adopted all of the government guidelines, all 42 pages of it. It comes at a huge cost. It gets in the way. No bride wants photos with masks on. Weddings aren't made for socially distancing. So
I've got my wedding. I've got my brother's wedding on Thursday. He's pushing through. Actually, interestingly, because of this exact scenario, the next available date for them to get married at this particular venue was December 23.
Wow.
So they were, that gives you an indication of a lot of it, as you say, bookings have been pushed forward to years from where they're not able to get a full quota of their guest list here this year. But it gives you an idea of the demand and backs up what you were saying earlier.
But I think, look, if you travel the world and you go to countries and you need to prove that you've had a jab for yellow fever, then you do it, don't you? You have the jabs, you go on holiday. I think it is, from my personal perception of this is that, yes, you will need to show a passport to say that you've had, not a passport, obviously, but a health passport to say I've had the jab, or something on your phone or something. We've got to, use this to make everyone safe and save lives.
Yeah, no, you're quite right. Mike, I'm conscious we can only get 3 screens on here. So I'm conscious that you've been left out of the screen scenario. Have you got any final thoughts before we close proceedings here? Because obviously we're getting close to the hour mark now.
First, thanks for Tom, who's been quite gentlemanly by dropping off his camera there so that I can...
I should get off the screen as well, frankly.
Finish off. No, I think we've covered, quite a lot of ground there, ultimately. I think it was interesting, it was something that Tom said earlier about some of the hotel operators in Cornwall, having some of the customer base that would traditionally maybe gone to Ayia Napa and other hot and exciting countries and areas. I think they'll be the first to go back again, and maybe that's not such a bad thing. The Southwest weather being as it is, can't always promise a steady climate. So yeah, I think potentially those that want to go abroad will go abroad. I think ultimately that will be driven by probably quite aggressive marketing in those locations, and I think probably that's no bad thing. I think it gives the opportunity for the Southwest to probably just up its game once again, really.
Yeah, thanks, Mike. Okay, well, if we have, I don't think I've missed a question on there. I'll just double triple check. No, I can't see anything on there. So we will wrap up the session now 3 minutes early, which is actually a first for us. But yeah, thank you very much to our contributors today. It's been really, really useful. Thanks to Mark, Tom, and to yourself, Mike. It's been really, really useful. I hope everybody has found some insight today from both our presentations and then the chat that we've had afterwards there. If you have got any further questions that you can't think of now, that you want to ask any of the relevant parties here, please do email myself or Leslie or Mike, and we will hopefully get an answer round back to you with their response further down the line. We have got another session coming up in January, which will be widely circulated once we've nailed down a date for that, and that will be again a leisure topic of our choice. We try to keep things relatively hot off the press, so we try to keep in step with what's going on in the market with all of these leisure webinars. But until January, everybody have a very, very good Christmas period. Thank you very much for coming. Have a happy new year, and here's to a very, very successful 2021. Thanks very much indeed.